SoFi stock hit a 52-week low this week and only started to bounce back after the CEO, Anthony Noto, went on CNBC to address analyst concerns, to address downgrades. In addition to this, we also got updated short interest numbers for SoFi, as well as some new information around the credit card aspect of their business, which we know is going to be a big deal in Q3. Lots to cover in this video, so let's dive right in. Okay, so for the past several weeks, there's not been much in terms of news with regards to the company, and this past week was very different from that. So I'm making a weekly recap again after being on a hiatus for a couple of weeks. As always, let's start off with the stock price action. Over the past week, SoFi stock has risen about 7.5% to close off at $6.97 a share. If you look, there's a fairly steady rise since Tuesday after we hit 52-week lows at $6.15. We're just regaining all of that lost ground over the past week. Much of that was fueled by Anthony Noto's interview with CNBC on Wednesday. Now, on Monday, we got some downgrades from KBW, who adjusted their price target downwards from $7.50 down to $7, maintaining their market perform rating and highlighting some concerns around credit cards, specifically, which the CEO later addressed 2 days later on the CNBC interview. Also on Monday, we got a price target shift from Barclays from $10 a share down to $8 a share, and they are also maintaining their hold ratings. So it seems as though analysts are just following the price action. As we know, this has been done in the past. If the stock is going to go up, then analysts are adjusting their price targets upwards. And if the stock falls, then they're going to be adjusting their price targets downwards. On Tuesday, SoFi put out a post that the Pershing Square IPO was going to be available through SoFi Invest. And I don't want to harp on this one too much because we've talked about this before with previous IPOs, with Instacart, with ARM, and others. It's good that SoFi provides the alternatives for IPO investing, even though they're not actively coming out and recommending that you should be investing in Pershing Square or any other IPO. It's just good that they have the option because it gives them another leg up when you're comparing them with different brokerages out there. On Tuesday, I put out a video addressing some potential concerns for the second quarter, just given where management had previously guided and their track record of double beating and raising guidance. Now, I'm fully confident in the back half of the year, given how they've guided. My concern was more so for the immediate second quarter specifically. However, I think the interview with Anthony Noto on Wednesday was fairly insightful and did address some of my concerns. So with regards to this interview, which happened on Wednesday, I made a full reaction video earlier today, just as I was preparing for this video, making notes and such. And if you do want the full 20-minute breakdown of my thoughts on that interview alone, just a first watch recap, you can make sure to check out that reaction video I posted earlier today. But to summarize, I think Anthony Noto did a really good job of reiterating the expectations from the management team around the macro environment with regards to rates, with regards to the underlying factors contributing to their guidance, namely unemployment, spending patterns. And this is all important because it contributes to the rationale around SoFi being overly conservative in the lending side of their business. And the reason why is because many bearish critics are pointing to the stagnating growth of the lending segment, and they're using that to argue that SoFi is facing headwinds. And the fact of the matter is, management has consistently reiterated that this is a conscious decision that they're making by the management team to be conservative because they don't know where the rate environment is going to take them because it's an uncertain macro. And as we get more information, as we get more certainty in the macro, they can allow themselves to be more lenient on growing that lending segment. But right now, they're being conservative on purpose, adjusting for risk, given that uncertainty in the market. And the reason why I say we're getting towards a place of more certainty now is because he touched on this in the interview. We're approaching a time where a recession is essentially off the table. This 5% unemployment is essentially off the table. And we now get a higher consensus of what the rate cuts are going to actually be. We're going to have 1 to 2 this year, as opposed to, the 4 or 5 that people were expecting at the beginning of the year. And so naturally, we're going to see higher activity towards the end of the year with regards to the lending segment specifically, and especially in 2025, after the effects of these rate cuts have been translated into earnings results. It's obviously going to take some time for that to come through into the earnings results. And so we're going to be seeing that in 2025. So he touched on this. He also touched on the student loans and the home loans. And interestingly, Chris Hager in Data Driven Investing made a post around this, around the home loan offering and HELOCs specifically, given that Anthony Noto said in the interview that they had made a recent decision around home loans. And I think with the acquisition of Wyndham and with the rates falling, both of those form a perfect storm of tailwinds for SoFi to be ramping up that aspect of their business. And so that really remains to be seen in 2025 after the rate cuts actually come through. I suspect we're also going to see more innovations in terms of these offerings becoming more diverse from a student loans and a home loans perspective as they become more into the limelight. From a consumer perspective, I suspect we're going to be seeing more diverse offerings, some more attractive promotions, and just more marketing and buzz around them specifically. Now, in the interview, he was also asked around AI and he shared his vision of what that user experience could be like on the long tail for SoFi with regards to AI. I share my full thoughts in that previous reaction video, so I won't dive too far into that. And finally, what many people took away from that interview was when he was asked about the results of the presidential election, Anthony Noto said that SoFi as a business would benefit more from a Republican administration, which is something that I don't personally disagree with. I shared more thoughts in that reaction video, so definitely check that out. I also made posts about this on X. This was one of the clips that I actually had seen beforehand of that interview. And I think, frankly, it's interesting coming from Anthony Noto, who's historically been Democrat. He's been on the left. And now he's basically saying that the company would benefit more from a Republican administration. Now, many people are taking that and they're forming their own conclusions around SoFi. I'm seeing it a lot in the comments of the reaction video that I actually posted. But he's simply saying that the business is going to benefit more from that increased activity that comes with that administration. Now, coming back to the actual news that I saw, there's one last piece with regards to the credit card segment that I want to touch on very quickly. And that is, of course, the benefits of this credit card offering. We saw a post earlier this week that SoFi's credit card is offering a 0% APR for 15 months, $200 cash bonus, unlimited 2% cash back with no annual fee. That's a really attractive credit card offering. And quite frankly, if it was available up in Canada today, I'd be front of the line buying that thing. And the fact of the matter is that this isn't necessarily a new offering from SoFi, but it's coming back into the limelight because SoFi is actively promoting it again to their users. And I believe the 0% is an introductory rate. And the fact of the matter is that we haven't seen many promotions from SoFi over the past couple of months. As I said, it's been quiet from a news front, quiet from a marketing front relative to Q1 and previous quarters. And that's one of the factors here that makes me concerned for the second quarter earnings, as I mentioned in my video earlier this week. But the interesting piece here with regards to the credit cards is last quarter, management promised innovation in credit cards in Q3 and in the back half of the year. And it seems as though now that we are in July, technically in Q3, they're ramping up the marketing and the promotions of their credit card offering specifically. So, really interesting to see that because in my mind, it's in anticipation of this new innovation that they're going to be announcing. And I think that they're still trying to drum up attention on credit cards as we head into the second half of 2024. Now, in my reaction video earlier today, one of the first things that I said with regards to that interview with Anthony Noto is that it comes at a very interesting time because Q2 is just a couple of weeks away. And not only did SoFi get downgraded, not only did I get critiqued by analysts, not only did they hit 52-week lows on Tuesday at 6.15 per share, but they're also seeing this continuous elevated level of short interest. The short interest for the end of June numbers came in at 18.6% of the float. I made a post on X about this. So it's still a highly shorted company. The sentiment is low, the morale is low. And even when he was asked in that interview on CNBC, Anthony Noto himself said that he is a large shareholder and he is also disappointed with the stock price action. But as a matter of fact, all that management can really do is what they have been doing consistently for the past several years, which is executing at a high degree. And this discrepancy is something that I try to highlight along with other SoFi content creators, Tanner, Chris, and others, is the fact that through videos, posts, articles, charts, all we're trying to highlight is that SoFi as a company is executing consistently and is very reliable in that continued success. Whereas the stock price action is completely detached from the fundamentals. And in the short term, those two things are not correlated. So as much as management can try very hard to have continuous innovation, to continue beating their numbers, to continue knocking it out of the park, essentially, the stock price is just not responding to that. And I think being a content creator specifically for SoFi recently has been very polarizing because as we know, sentiment follows price. I posted a graphic on X this week, and it's basically an image of a swarm of people rushing to buy Apple at $230 a share. Meanwhile, a couple of months ago, when Apple was trading at $165 a share, everybody was staying away from it. They were all saying it was going to drop further. They were all saying it's a massive value trap, and it's basically going to underperform wildly. And since that time, in the last couple of months, Apple is up, 20% plus. And meanwhile, that entire time, I was making these videos on Bootleg Weekly, buying up Apple at 170, explaining my rationale as I am doing now with SoFi at $6. The fact of the matter is, just as it did with Apple and with Tesla when I was buying it at 165 and now it's at 250. Many communities have experienced this because sentiment follows price. And I recently saw a post by Amit how he and Arnie faced this when Palantir fell into the single digits. And now with Palantir about to break $30 per share, everybody loves it again. Everybody's buying it again. It's a darling stock that people are piling back into. Meanwhile, if you go back 12 months, Palantir was at $7 and nobody was touching it, right? Right now, SoFi investors are facing the exact same thing because the stock is down. And the funny thing to me is that management is asked and probed by these analysts and by these people interviewing them, why isn't the stock higher? What are you doing for the stock price? The stock is down year to date, as if they can control the stock price. Of course, shareholders are going to be disappointed. I'm disappointed. Anthony Noto is disappointed. Everybody's disappointed holding SoFi, not necessarily because the stock price is down, but for me at least, I'm more disappointed because management's best efforts to increase the company fundamentals are not translating into the stock price. And that is a source of frustration, that massive disconnect between those two levers. But that's also, I think, where the opportunity lies. And that's the reason why I've been DCAing consistently over the past several years into SoFi, is because for as long as those two things stay detached, there's an opportunity. Now, of course, time is going to tell where the stock goes. The interview on Wednesday did ease some of my concerns regarding the second quarter earnings. I'm more hesitant around this earnings than previous quarters. I hope I'm proven wrong and the company completely crushes the results. But even despite the results, even if they come in slightly below estimates, or even if they meet estimates, I think the setup is going to be very bullish because, in my personal opinion, as I've said continuously before, the reward far outweighs the risk for SoFi at these levels. And we're just seeing a perfect storm forming with regards to the sentiment, the morale, the high short interest, and the consistent execution by management. And I think that SoFi shareholders are eventually going to be rewarded for that. It might not be this week, it might not be this month or this quarter or even this year, but I think eventually it's going to come a point where people realize that, wait a minute, these two things don't make sense, because people are basically going to see the difference between the stock price and the company performance. And they're going to realize that they can arbitrage that difference because this company is not trading anywhere near where it should be trading. Catch us later tonight on the SoFi Weekly Podcast, 10 p.m. Eastern on this channel. If you enjoy this content, subscribe for more. I will see you in the next one.